Hi guys, so while most of the focus over the last few days has been on the collapse of the pound against the dollar, which is having a detrimental impact on dealing with the cost of living crisis, for example, items such as oil, which are purchased in US dollars, are now automatically more expensive. The UK also imports a lot of food. 40% of UK food is imported from the EU during the winter period. Another problem is interest rates. In a video recently, I spoke about how the Chancellor Kwasi Kwarteng was to meet with the Bank of England and they were to discuss how best to deal with this crisis. Well, it seems the central bank, and I quote, will not hesitate to take action, but we may not know what's happening for some time. Now, the action looks more and more likely to be an interest rate hike, and this means a whole load of other problems.
Sterling people have been focusing on is also mortgage rates. What's going to happen to what the Bank of England does with interest rates? One way of looking at that is looking into the future. So the last chart was deep history. This is the future, looking at what the expectations are for interest rates in the next few years. And just earlier on, in February, people thought it was only going to peak at 1.5% next year. Then we had, obviously, what happened in Ukraine, 2.75%, so they're raising their expectations for interest rates next year. Then when the new government, Liz Truss's government, came in, 4.75%. You see this line getting higher and higher, and as it gets higher, our mortgage costs are creeping up as well. And then finally, that's where we are today. Just look at how much those expectations for interest rates have increased. And of course, as that goes up, mortgage lenders taking their decisions, withdrawing some deals, putting up the cost of others, meaning this will affect households pretty much immediately.
Wow, now this is completely unsustainable. The Tory government can avoid reality no matter how much they try, but this will eventually force the Chancellor's hand. Kwasi Kwarteng has promised to issue new fiscal rules following the ones that he ripped up, and now will attempt to calm the markets. In another move to try and improve confidence, the Treasury is finally publishing the OBR forecast, something they had refused to do before. But other problems persist. Government borrowing is more expensive than it was at any other time in the past, and you have to go back to 1957 to find an equivalent. However, if government borrowing becomes more expensive, then it will mean cuts or more taxes. But the Tories are dead set against the latter, at least for now. So it'll probably mean cuts to public services, the ones that are vital to keep society functioning. Now, all of this could have been avoided if the Chancellor had kept the higher rate of income tax and imposed a windfall tax on energy companies' profits. But since Brexit, a deep rot has set in, and it looks like the only way to remove it is to remove the Tories from power. Let me know in the comment section, guys, what you think about all of this. As always, your comments are greatly appreciated. Thanks a lot.